Hello, everybody. So today I want to talk about the Real Brokerage, ticker symbol Reax. It's my real estate play for the next few years. It is my play on the rates eventually dropping starting in May, and on real estate making a comeback. Too many people sitting on the sidelines in real estate. Too many people need to sell. Too many people need to move. And that market, in my view, will explode, will be unlocked as we inevitably get rate cuts in the second half of 2026. It's actually unbelievable that the Fed chair has kept rates this high out of stubbornness, out of political spat. That's essentially the reason, in my view. But I like Reax a lot. If you know this channel in the past, I used to like Open Door, like way back in the day, one of the early stocks of the channel. Now Open Door, I think, has been taken over by hype, a lot of hype. Some of it is real, perhaps, but I'm not following Open Door much. Reax, though, has the most spotless numbers I've seen in any story. I mean, these remind me of the Melly number or the Nubank number or the SoFi number. It's literally spotless, and it is spotless in an awful real estate market. Nobody would argue with me that the real estate market has not been awful since, well, look at this chart. It starts in 2023. Since 2023 until 2026 today, it's been an awful real estate market. Valley of despair all over. But if you look at Reax has been able to grow a lot. And the revenue is steadily growing. It has steadily grown between 60 and 50% for years now. And it's just so stellar. Everything is growing. Adjusted EBITDA is growing stellarly. Agent count is growing stellarly. And transactions are, I mean, this is literally as exponential the beginning of the hockey sticks as it gets on the transaction side. So truly amazing company, if you ask me. I'll get to them in a second. Of course, Reax, what they do, they work for agents, right? Reax is a disruptor of mom and pop brokers, your local Keller Williams, your local Howard Hanna, your local pseudo franchise. It's disrupting them with an app, and an app that, of course, gives an enormous commission to the realtors. The realtors only pay 15% commission with Reax against usually 30% at a local broker. So the top realtors are just incentivized, those who don't need mentorship, those who don't need training, they're just incentivized to go with an app. And the app is so much cheaper. It doesn't take that big of a cut whatsoever. This is such a classic disruption play. This one is right up my alley. Again, I am continuing with flawless number, like literally everything you want in the right direction. The gross market value closed, right? So that's like kind of like the equivalent to the gross merchandise volume, for example, in certain stocks. They closed, I guess, Q4 75 billion worth of real estate, up from 69 billion, up from 62 billion, up from 55 billion. Again, stellar exponentiality. Home prices, they're pretty much flat. I guess they're slightly up, but barely. Just under 400,000, the median home price sold on the platform. Now, think about what's going to happen when the rates drop and when we go through money printing, right? That median home sales price, I expect, will increase. And when that increases, what's that gonna do to the gross market value closed? What's that gonna do to the revenue for this company? Again, through the roof. I think it will greatly benefit from the increase in the price of real estate. Now, you will have some further on this company, and I've seen it in a few places, and it's people complaining about the gross margin, and those people who complain about the gross margin, they actually don't understand how it works. The way the commissions are paid are designed such that the more success there is on the platform, the lower Q4 is going to be. When Q4 sees margin in the 7% or even lower, if it ever did, that would be a very, very wonderful thing because it would mean that the realtors would be doing very, very well. The decline is due to the mix and the cap. So the way it works is they pay a commissions revenue. Realtors keep 85%, okay, and the 15% is the fee, but there is a cap at $12,000. So whenever a realtor earns more than $12,000 of commissions income, they get to keep all of the commission income. Imagine how powerful it is to attract agents. All agents want to get rich. They're going to move to a platform like this, right? This is not at all what you have at a regular broker, where you got to pay 30% of your cut, and that's in perpetuity, right? It's not the case for Reax. So essentially, after realtors have earned enough commissions, they stop paying a commission to Reax. But you see, that is not a problem for Reax. That is not a problem at all for Reax, because they make they are getting, I'll get to that in a second, but they are getting into the mortgage business and into the title business. And eventually this company wants to make a bunch of money on these ancillary services, right? So these ancillary services will help make a bunch of money, because once an agent uses the app, even if after a few sales, let's say 3 or 4 sales, which by the way, most agents don't sell that in a year, but let's say after 3 real estate sales, once they've sold 3 homes, all of the homes they sell after that, of course, they don't pay a commission anymore, but they're still going to use the app for title. They're still going to use the app maybe for mortgage. Mortgage not guaranteed, but title is definitely much more of a guarantee that they would use the real brokerage for title, and that's 80% margin. The title business is 80% margin. So to me, it's a really big deal. And keep in mind, most agents don't sell a house a month, right? Most agents are going to sell a few houses a year, if you look at the big bulk of agents. But they are doing their best to attract major agents. So actually, when this goes down, this is due to the mix of their agents, and this is due to the mix of their agents hitting their target. It's seasonality in the mix. Now, if you look at, I love how this company talks about AI. I love how this company obsesses about having very little employee per agent, as few employees per agent as possible. And they have a chart in the presentation where they compare themselves to other publicly traded mom and pop brokers. The efficiency at Reax is second to none. By the way, they're going big into AI. They're launching their own AI agents to help realtors. A lot of developments in that process. Also, not only is it per brokerage employee, like agents full time per brokerage employee, but you gotta keep in mind that 136 of their employees are in India, right? So the cost is not the same as your New York City broker employee, like some of their competitors are established in New York City, paying much higher salaries than what Reax pays its tech team in India. So that's quite a big deal. Now, as I said a second ago, the biggest challenge for home buyers is mortgage rates. This is their own data, right? They do this survey, and you can see, I mean, with the value of despair we've had in real estate, most people think that it's because of the mortgage rates that they know. They don't think they know that they're not getting a house because of the mortgage rates is too high. That's not economic uncertainty, sure, a little bit, but that's not the bigger expenditure. It's all about the rates. It's literally half of it is about the rate. I guess then you got to look at the inventory a little bit, and you got to look at job security a little bit. But job security is 2 times less important as interest rates. Interest rates are a very important thing. Very, very important thing. And that's the one thing that's going to drop. So the total addressable market, I think, for a company like Reax is going to go high. It's going to go through the roof. Now, these ancillary services, this is another big deal. These ancillary services are not offered in about half the states. They're only in half the states. So they're investing heavily in offering all of these highly profitable ancillary services in the entire app for the entire network. Look also regionally, this is a very Texas, California, Florida. I mean, I guess it's logical, the size of these states, but it's very heavy in what I'm gonna call the sunny states, right? Which also makes sense if you're gonna start real estate. You gotta go into the hot markets. I would say Florida, Texas, California, definitely hot markets from a standpoint of velocity. Right, velocity. How many times people move? How many times people sell, move, sell? Go from California to Texas, from Texas back to California, California to Florida. There's a lot of moves, right? Florida too. Like how many New Yorkers, how many Ohioans moving to Florida? There's a lot of those too, if that makes some sense. So this is the high velocity market, and that's where they are very present. I've seen Reax on 2 occasions in my neighborhood, pending homes, pending sales. Anyways. And I'm in Texas. I'm located in Texas. Real Brokerage, frankly, I mean, this is yet another case where the fundamentals absolutely do not reflect the stock price. Look at this stock price. This stock price has been extremely, extremely random. I cannot explain. It's total randomness. We were between $4 and $5 most of the time last year. And then the market decided to give a 50% haircut to Reax with no news. No news whatsoever. Market just decided we're going to give a 50% haircut to Reax, like it has happened to so many stocks. Yet, these are the numbers. Only in one direction. Only in one direction. The market doesn't look at the fundamentals. It doesn't read any of the stuff. It absolutely doesn't read anything. In fact, the stock barely moved today after this stellar earnings. The stock was essentially trading in line with the market for growth stocks. It barely reacted. So it makes absolutely no sense. If you look at the stock, by the way, they have a 150 million buyback outstanding, a facility for buybacks. They used $39 million of that. And so those buybacks, as they say on the call, they are mostly used to offset dilution from their rewards. They reward their employees and they reward their top realtors with some shares. And so they offset the new shares by buying back stock. And you can see, so this is Q3. We don't have Q4 yet, but this is from Q3. You can see from Q2 to Q3, we removed shares. Why? Because the buyback started in May, and they continued that buyback throughout the year. So I expect shares outstanding to be flat going forward. And again, I saw that was a FUD somewhere that they were printing shares galore. They're actually buying back shares. And the valuation, of course, on this channel, I'm all about the valuation. I don't want to pay expensive for a stock. I want it cheap. I want a stock inexpensive, and then I let it ride. This stock, Reax, is trading at an enterprise value over gross profit, over revenue growth of a 0.058. So dirt cheap as HIMS, for example. Very, very, very cheap, very unnoticed. The rule of 40 is there at a 54%. Yes, sure, EBITDA margin is only 3%, but the growth is 51%. And that growth might actually be higher. That's just the analyst number. Reax didn't give an outlook, but that growth could be much higher, especially if we see rates drop going into the summer. So to me, the stock is no brainer. It's a no brainer. And let me conclude just by spending a second on the business model. The business model is so simple. Reax works for agents. The customers of Reax are agents. They're not necessarily the people who buy the homes. Real Brokerage, a brokerage works for agents. Agents are essentially independent contractors. I mean, they are entrepreneurs who have their wealth dreams, who want to be rich. That's what a lot of agents do. They want to be the top agent. They want to get wealthier. The dream of the agent is to make a bunch of money through commissions. And so Real offers exactly what the top agents want. That's why I say it, quote unquote, grew by, quote unquote, stealing the top agents from mom and pop brokers by not only wanting 15% commission, only 15% commission, not only, but also by putting a cap at $12,000. Think about that. They put a cap on there. So So essentially, if you're a real estate agent and you want to be rich, you're gonna go work for Reax, right? And top agents are very much attracted by this value proposition. Actually, most of the coverage on YouTube of Reax is about real estate agents praising Reax. Very little coverage of Reax from the stock angle. But anyways, that's a big deal. And of course, this is aligned with the times. This is fascinating survey. Most people don't care about the broker. You don't work with a broker. You work with an agent. And most agents get to work with their customers through, look at this, personal relationship / personal referral. This is a highly, quote unquote, personal selling business. You're likely to pick a realtor because you know someone who had a good experience with them. That's most of the realtor business is relational, is they know someone, or maybe they've bought houses with them before they were satisfied, they're going to pick them again for the next house. So realtors, just like back in the day, a lot of car salesmen in dealership, realtor pretty much have a book of customers and they move around with that book of customers, and customers care about working with the realtor with whom they had a good experience much more than they care about the brand of the realty. And this is crazy because realties invest so much in local advertising, bragging, we're Century 21, we're this, with that. But that really doesn't matter. It's the name of the agent that matters. And that explains why, agents spend so much money on marketing and putting pictures of themselves smiling, etc. If you watch any real estate show, which I don't, but I have in the past, real estate shows show you it's all about a personality business. You need to create your own persona. These agents create their own narrative, their own persona. They have their own look, and so they draw people in who are under the infatuation of buying a house and spending a bunch of money. So Real today is attracting a lot of entrepreneurial agents through low cost. But then in the future, the Real, and they have their own fintech division. Real in the future is the app for realtors who want to make a bunch of money. That's what I think. That's what I think is going to be. And you can see Real in the future is what? Empowering agents to build long-term wealth, all under the Real umbrella. And that's why they're releasing e-wallets, debit card solution, wealth solutions for successful realtors. Real works for the realtors, the enterprising realtor who wants to be rich, essentially. And that cutoff after $12,000 may seem like a problem, but it's not a problem because it's all about creating a funnel towards highly profitable mortgage and super highly profitable title services. It's all about the funnel, especially for the title services, but also for the mortgage services. So to me, this is a big deal. This company is firing on all cylinders. It is fully unnoticed. If it ever gets noticed, it's going to be more expensive. That's my view. So love it very much. Love the call. This was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.